Hello traders out there in Traderland. My name is D7 here at Grok Trade. This weekend edition good through October 21st, 2018. And it's a Friday night and I thought, let's do a video. Anyway, let's take a look here at the markets. The only thing that jumps out at me is actually two things. One, financials, or I'm sorry, Russell's 2000s down 1%. 1%. If you look down here a little further, crude oil up 1%, but the VIX, what's interesting, we're right at 20. I mean, just yesterday we were at 12, right? Not literally, but we were at 12. We're at 20 now. I have alerts set at 30 for good reason. I'm going to spend some time here looking at the weekly charts. The week's over, we're halfway through the month. This is critically important. S&P 500 weekly chart. We've had a bad couple weeks. Bad couple weeks. This week started off strong, we came right back down. We have a major trend line here, we closed below it. Actually, let's talk about this one first. When I put the sell on, we dropped. We broke through this critical trend line. When that happened, we had a major sell-off. That sell-off was so drastic last week that we actually blasted through another major support line. This is a major area of this support line. It blasted through it. What was very important to me this week was for this to go up and stay above, to heal itself, to get back above the trend line. It failed to do so. We are now decisively below the 20-week moving average. That's bad on the S&P 500 Spider ETF. This is dangerous territory. We only have one other major trend line to deal with. We have a support line at 271. We have this major trend line here that would, it's going to be right around 267, 268. If we get below that, woe to this market. I mean, woe to the market. Who knows where the bottom will be? I mean, is this the start of a major 9-year correction? Or a 9-year run, a major correction after a 9-year run? Because when it happens, it's going to be a bloodbath. Reminiscent of 2007, when I started seeing this. I have videos, if you go back and watch my videos. 2007, I was like, whoa, thunder in the distance, bad news, we got to be careful. That's what I'm sharing with you now. Even though we've had pullbacks like this. I mean, if you just look back here, February, we had some nasty little pullbacks, okay, and nothing came of it. The problem is we were in this channel. The channel now, we quit hitting this resistance point. See this? We missed hitting that. We didn't hit it. That's a problem. Then it dropped early. It dropped early. Now it's starting to drop. With this drop that we're seeing here, this could be significant. This could be the start of a serious pullback in the markets. Again, if you just have a healthy 50% pullback on a big run up, 50% pullback is a healthy pullback. 27 is like the ideal. 27% pullback is an ideal level. If that happens to the market, it'd feel like a bloodbath. It'd feel just like the financial crash. Now, it's all doom and gloom. It sounds like that, right? All I'm doing is sharing with you, because in 2007, the one regret that I have is I didn't pound the drums louder to warn people that this could be happening. Now there's levels of technicals that still have to be broken for me to really be pounding my chest, okay? But because I've been trading 20 years, I'm starting to hear the thunder. Sometimes if I could be faulted on anything, my fault could be on being too early for the masses. And I would say the appreciation, if not the respect for earliness, is not something that's savored, okay? I get it. But as far as I'm concerned, I care about you and I care about your finances. I care about your family. And to to see what I'm seeing here, and for me not to take the time to tell you that just be careful. This is something that could be significantly important to the markets going into the future. If you look here at the diamonds, let's go there. See, this is a nasty problem that we're seeing here on the weekly chart. One, we hit resistance here. We come up. We failed to hit resistance. I mean, a significant miss. Now we have a double top. That's an M. See that? M, M, M. And we just broke the neckline. So of this, I mean, there's no neckline on a double top. No neckline, but anyway, here's the problem. See this trend line? We bounced off of here. We went down. Last week we closed below it. This week we tried to get above it, but we failed. We closed down right at it. Why did it close right at that trend line? It's not by accident. It's because that trend line is legit. We have support here. We come up, find support there. There's your 2 points, and then cracked it. We go above it, and we close right at it. We have broke the trend line. This is trouble, and we're below the 20-week moving average on the diamonds. Nasdaq, let's go there. The Nasdaq is our only saving grace at this moment. Apple is still holding up. When Facebook and others are just crashing and burning, Apple is still there. But look what has happened with tech stocks. We dropped last couple weeks, right? Last week we went down, 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 but we bought back up above this critically important trend line. If you look back, this trend line, we touch it down here, and this is in June 2016. We nail it October 16, November 16, December 16. We come up, smash it at April 18, okay? We bounce up, and now that's where we're at right now. We're at a critical support level. We should bounce here. At one point this week, I thought we were just a nice, healthy bounce right off of it. It should have did that, and it should have stayed, but it did not stay. We pulled back, and we closed right on it. Matter of fact, it's so... I need to go to a line chart to check this out. I mean, it's just like right on it. I mean, look at this. We come over here, support, support. We come up, major support. Do you guys see this? Are you follow me? We touch it. I mean, perfectly. This trend line, you got to learn these guys, and you got to draw them correctly. So this is a rising wedge. It's more bearish than it is bullish. This is trouble city, man. This is trouble. This is bad news here. Bad news for the Nasdaq. But we closed at support. We should bounce off of support. If we do bounce, that could pull the markets back higher. It could do that. But if we break down below and we stay down below this next week on Nasdaq, I mean, it's going to do just what the Dow and the diamonds have, or the Dow and the S&P has done. Let's go to Russell's 2000. Russell's 2000, usually whatever this does, the market does soon. Last couple weeks. This week we broke a major trend line. Because of that, we put a sell on it. I didn't put a sell earlier. I just thought it was going to be a traditional pullback to the rising 20-week moving average. We get a bounce. We did not get that. We broke down below it. Bam! It broke the support line there. If you go back, I mean, the Russells, I mean, this dude goes back. This is February 2016. We touch it here October 16. We're right here August 17. And we hit it here February 18. There April 18. And then we smash it 2 weeks ago, October 18. Last week, we crashed down further. This week, we try to go up, and then we close down near the low. We're toast. That is bad news. Financials. Please, financials, bail us out. Here's what's going on with financials. We're up. We're going into a bull flag. This is a bull flag. This is our only hope. See this support coming across. Go to a line chart. Support coming across. You guys get it? This is our only hope, because in the bigger time frame, look at this. I know there's a bunch of junk here, okay? Let me move some of these out of the way. These are what the markets have been what the markets have been doing. Going back, so you can see this 2014 up 15%, we lost 2% in 2015, 2016 we're up 20%, we're up 22% 2017, and we're going to be basically break even 2018. That's what it looks like, but we'll see. We got a couple months here, right? A few months. Here's the deal. We're up. We have a rising wedge. See that? That should break down. It did break down right there. Do you see it? We broke that rising wedge. Two blue lines going up. We broke it right there. We broke it. Zoom in, pause the video, see that. We broke it right there. But this minor trend line, you see this? Support, right there at support. We're bouncing. We're finding that support. I'm telling you this, if we get down below this 26 mark on XLF, this is financials, guys, ETF on financials. If it breaks down below that, it could get nasty very fast. We have a major trend line down here, and this puts us around the 22 mark. Can you imagine 26 dropping to 22 in the financials? The market will be a significant sell-off if that happens. But right now, if this stays red lines only, watch those. What red lines? Resistance up here, support down here, big flag built off of a big flag pull. This could rally, bust through the blue line, bust through the minor line, get through this area of 28.75, get through those areas. If that happens, look for a major run to the upside to 33, okay? So we're at 33 or 22 soon on financials. That's what we're looking at here. There's a lot of uncertainty creeping into the markets. Look here at the US dollar. One thing is doing well. We're up. This is a weekly chart. I'm just looking at weeklies here. Up. We're going up. And there's no trend lines to speak of. I mean, we're in this huge channel. We're down. We should go up. We should continue higher here. However, it looks like we're going to go into consolidation. Something tells me we're going to stay below this pink number and below this pink number and above that pink number. Those two pink lines. I think we're going to stay in consolidation for a while in the US dollar. Crude oil. This is the problem with crude oil. You guys see it? Rising wedge. What usually happens to rising wedges? They usually drop. Here are trend lines that could act as support above the 20-week moving average, but will we stay above it? Maybe. I don't know. But we're pretty extended, and we are in a wedgie formation, and that usually spells bad things for crude oil. But if we can broach and then break through the upper trend line, that'd be great technically speaking for the markets. Silver weekly chart. We had this symmetrical triangle. Symmetrical triangle broke down. Got a sell on it, down. Recently put a buy on it, but it's short-lived. I mean, this is a bear pullback. Look for that to drop. This is a good opportunity to be looking for sell opportunities on that. We have major support coming across there. So if we do sell it, if on the way down, just know that it could hang up here. So just be watching that. Gold, take a look at that. Had this huge symmetrical triangle. It did break down. We have a major support line coming across. Let me just show it to you guys. This trend line goes way back. Okay, major support here. Let me go to a line chart so you can see it really well. So that puts us October 2008. Okay, 2008 October. We come across, we tag it a couple times here in the fall of 2015-16. So it's 2015, fall of 2015, and early 2016. Okay, that's where we're at. Then we come across, and that's where we're at. We touch it right here in August 2018, and again here, September 18. That line, if we drop below it, say goodnight to gold. So even though I have a buy on it, I think it's going to be short-lived. Look for this to drop, guys. I think this is going to be a good time to be looking for shorts to come in. We'll see, though. VIX is very important. I have alerts set right here at 30. Let me explain to you why. The VIX, for you guys that don't know what the VIX is, this is a volatility index, and this is a fear indicator. So the higher the VIX goes, the more fear that's in the markets. And it's usually looking at about 6 months or so. So the fear that you're seeing now is what's expected around 6 months from now. And we have seen a spike in fear. This is a weekly chart. and we have a buy on it, up, 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 up. So we went down here in the 11 area at one. I mean, if you look here in 2017, we just hovered in the 10s and the 11s, which is historically very low for the VIX. And then we hovered for the, most of the spring and summer. We hovered right here in the 12, 14 mark range. But now we're at 20. We're at 20. We're at 20. We even at one point got up here to 28.6 area. Let me share with you why the 30. I put an alarm on it. This is the market crash. We have a spike here that got up to 96 on the VIX. That's unbelievable. When that happened, that was a shock to everybody. But I want you to see what happened just before the market crash. So that was the market crash of 2008, okay? And this is what happened. We had a spike that came up here about 37 mark. But do you see how we hovered? We hit this area right here around 30. We hit the 30 mark. We got above 30. We're at 36. We come back down below 30. Here we get to what, 35, get down below 30. We dip down a couple times, we go up and touch 30, you see the shadows there, and then the market crash. Anyway, this was the thunder in the distance. That's the thunder in the distance before the major market crash. If you look over here, 2000, 99, 2008, when the market started to crash, you don't even see the VIX dropping that much here. I mean, VIX got up, what is that? Almost 48, almost 50. Up here it gets to 43. But look how it hit 30, 30, 30, 30 right here a few times before the market started falling apart. But this is what's very important. 2007, this was July. August, we had a spike. We touched it in November. It's 2007. We're at it again January 2008. But at these points, I'm doing videos warning everybody that something's wrong. March 2008, we drop down. Everything's fine. It looks. We pop up. We hit the 30 again. We pop down. Everything seems fine because we're down here at below 20 and we feel good there. And then we spike and we just stay above. We're at 90 whatever, we're at 80, we're at 70 for weeks and weeks and weeks. We just stay up here in these unbelievably high areas. We're at 50. We stay between 37 and 57 for many weeks. Then we start to come back down, come back down, come back down, come back down. Pop back up here 2010. So but I care when we get up here above the 30 mark. So we hit it once. We got up here February 2018. Okay, we got up around 51. Bam, come back down, and we got near there. We're at 28.7 again. So are we going to hit this a few times before a major market crash? Yes. I mean, that's what's going to happen. That's what's going to happen. But again, I keep calling it a major market crash, but let me show you a monthly chart. This is on Bitcoin. Bitcoin, I'm looking to be long Bitcoin going into this next year. But let's go here to the spider. Let me show you something. I'm going to go to a monthly chart here. Monthly chart. Look at this. Well, hold on. Let me just show you like all data. Okay, this brings us back to... check that out. It brings us back to January 1993. I graduated high school in 92. So it goes back to just forever ago. Now this is the spider. We go up, 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 up. We drop. We come up. We have a double top there. We drop. We come up. We hit our head, and we blast through. All right. So I want to share something with you from 95 right there up to 2000. That's a 5-year run. Okay. 2003, that's 2003. We go up, up, up. That's to 2008. That's a 5-year run. So that was a 5-year run. The technology bubble was 5 years. Then the market financial crash, that was 5 years. Okay. We dropped 3 years here. We dropped 3 years here. Now, since 2009, okay, we have been going higher, 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 higher. And this is what's going on. This month's not over with yet. This candlestick is dynamic. It is not static. This is still moving. I mean, this video is good through Sunday, October 21st. This is what I'm watching. If we break this trend line, if you look here, if I go to a line chart, you can see how we hit support there once, twice, 3 times, and we broke it. This upper trend line, let me show this to you so you see it. Resistance, resistance. Let me put charts here. Do you see how this is major resistance right there? Major, major, major resistance. Come over here. And we come up there and we smack it there. Major resistance. So there's our 2 points. We come up here and we miss it. We do not hit that major resistance. I'm very particular on how I draw my trend lines. I want them spot on. Spot on. And then I go here, we broke. So we have another couple weeks to make sure that this goes back up higher. But this is a rising wedge. If you look here at the MACD, we have what's called a bearish divergence. Whatever this is doing is what this is going to do next. So if you get higher swing highs here, let me show this to you. If we're going up here, we should be going up here. If we're going down here, that's what we can expect here. So this is what my gut tells me. My gut tells me that we had a tick higher on volume on this drop. I think there's enough fear out there with where we're at with the VIX that we're going to probably close below this. The S&P will have to close above 283 for me to feel good about this. Okay, 283. So what's the chances that we're at 276 by next week we'll be at 283 or higher? I mean, it's anybody's guess. We don't know what the market will do. But what I do know is that based on what I'm seeing here, technically speaking, chances of that going back up are probably less than it's closing below. And if we close below this level, 276 or lower at the end of this month, a major trend line will have been broken. I'd say a minor. That's a minor trend line will be broken. And we will reach this lower trend line very quickly. So this 276 that you see in the market, or 27, that would be 2,760 in the S&P 500. Look at that being very soon down to 2,450. So we're talking a 200-point move down on the spiders, which could be like a 2,000-point drop on the Dow. You see what I'm saying? And so this is down here at a major area of support. That's our saving grace. This is when you'll hear me banging my chest. If and when we break this lower trend line, that's trouble. That'd be trouble, 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 trouble when that happens. So if it does happen, you'll remember this video and say, whoa, let's say the market's way down here soon, okay? You'll say, I remember this dude named D7 at Grok Trade who mentors people talking about this on that red candlestick. On that one. On that one. Check this out. I'm on a long time. He's actually a student of ours, sent this in. I don't know, can you see this? It says, make America trade again. That I just thought that was clever. But check this out. Hold on. He also made Grok Girl a shirt. Oops, can you see that? Grok Girl. How cool is that? His name's Brian. Thanks, Brian. Oh, if you guys send me stuff, there's a PO box on our website. I'll show it to everybody. Anyway, what I'll do probably in the description, I'll put his link. So if you want to buy one of these shirts, I'm just doing him a favor. I asked him if he had links. He sent them to me, and I'll put it out there. I'm not doing stocks. I'm not showing the stocks, but cut me some slack here, guys. Markets could rally up because the economy is rock solid. You just cannot beat this economy down. I mean, our jobless claims are at record lows. African Americans are at an all-time record low for unemployment. We're at 3.7 on unemployment, which is just unbelievable. I think a 40-year low. GDP is going higher. That is a really good thing. And we do have the Fed increasing rates, interest rates. I think that's a healthy thing for inflation. The only thing the deficit needs to drop, guys. It needs to drop, and the deficit keeps going higher. That's a bad thing. Our debt keeps going higher. Once we get over 22 trillion, and we're close to that, guys, we're unstable. That is a bad place to be. We've got to have an answer for our debt. We've got to figure that out here in the U.S. We have to figure it out. That is the elephant in the room. That's the elephant in the room. It's bad things. Guys, last couple of weeks, you've lost probably 8 to 10 times more in your portfolio than what an education from us would have cost you. Invest in yourself. There's no greater expense than being ignorant in what market tuition will cost you. Do yourself a favor, look us up for mentoring. It's 3 days. We have one coming up. Go to Grok Trade. There's top of Grok Trade. I'm not even going to show you the website. Go to groktrade.com. At the top, there's a button there for hedging. You can take the hedging course. That'll help you during this time, so you don't get your head handed to you. But if you want to make money in this volatility, if you're just don't want your head handed to you, then mentoring. I'm not here peddling it to you, but what just irks me to no end is individuals who think that autodidacticism, that's trying to learn something themselves, is the smart way to go. And they think that learning to trade is something that you can get yourself. I'm telling you, I thought I blew through 2 accounts until one day I woke up and thought, I can't do it myself. Don't let that be you. Don't let your money dry up. Don't lose money in the markets. Learn to be savvy. Kill it out there. Be a shark. Don't be bait fish. Be the person out there that's the smart one, that has a system in place. The smart people in the casinos are the ones that are owning it. The owners are the smart ones, not the gamblers coming in. 89% of all retail traders, that's you, lose money in the markets. They don't just lose money. Studies show that they blow through 100% of the trading capital. It's gone. Just like the people that go to Vegas. It's the same thing. Trading is significant. It can be the best thing that's ever happened to you and your family. Or it could be one of the heartaches, one of the broken dreams of your tomorrow. But I'll pose this one question to you. If you go through our trading mentorship, if you're like, man, I'm in, I don't care what it costs because I'd rather put my money, invest it into education than lose it in the markets. If you're smart enough to say that to yourself, which I wasn't. I blew through 2 accounts before I made that decision. If that is you, ask yourself, After you go, we give you all the tips, all the tricks. We give you everything. We pull out the stops for you and give you everything to reach your full potential in trading. We give it all to you. From this date, 1 year from now, where will you be? How will your life, how will it have changed? That question will tell you everything you need to know.